Okay, guys, we're going to do 2022's November paper 1 accounting grade 12, and we're actually going to do the income statement, which is 1.3.1. But before we get to that, I want to complete 1.1 and 1.2 because we're going to need that information. So let's start with 1.1, calculate the cost of the stock that was damaged, and 1.2 profit or loss, and 1.2.2 is the depreciation. So regarding the cost of the stock that was damaged, by B, number 1, stock records. The business sells shirts. The weighted average method is used to value the shirts, and the following information is given. You have an opening stock balance, you have purchases for the year, and then you have total available for sale, stock balance at the end, and units sold. Now they tell you the damaged shirts were not included in the closing stock figure, and they must be written off as a loss. So our first step is to apply a weighted average and calculate the average price per shirt. So what we're first going to do is say the opening stock value of 1,254,000 plus the total value of purchases 5325, and we're going to divide this amount by the number of units available for sale, 9,000. And that gives us an average price of 731. It's essentially this sum over here. And then, once you have that, you have to determine how many units have actually gone missing. So we're going to say 9,000 units that we have in total minus 7,750 units, which is what we sold, which gives us 1,250 units. If everything had worked out, that's the amount that's supposed to be left over after you've sold everything. But now they're telling you there's 1,185 units left over, which means something has gone missing. So now we say 1,250 minus 1,185, and that means there are 65 units that are missing. That is our damaged stock. So now the question is, what is the value of this damaged stock? So now we're going to say 731 Rand per shirt multiplied by 65 shirts that are missing, and that gives us 47,515 Rand.